All right, good afternoon, ladies, and welcome. As you know, my name is Christine Hull, and we have a fabulous speaker here today. Our lunch and learn topic is cash flow management, which we all need. And before I hand it over to Shalini, what I wanted to do is just a couple of quick things. I believe everyone has already gone ahead into the chat box and introduced themselves, but if you have not, please feel free to do that. Introduce yourself and share one link in the chat box where you'd like people to follow up with you if they are intrigued by what you shared. I'm again pretty sure everyone knows who I am, but just in case, Christine Hull, founder of the MAWB, and also the umbrella company that the MAWB is under is Christine Hull and Associates. Just a quick share to let you know that I'm a social media manager, social media trainer, and we handle social media management for realtors. We have 15 on our roster right now, and I have an opening coming up. If you know of a realtor who's looking to offload or outsource some social media, I have an opening coming up in April. So some of the things that I teach or train on are Facebook and Instagram, MailChimp, Canva, LinkedIn, and more. I have a 4-week Google apps, docs, spreadsheets, slides and forms coming up. I'll be sharing that very soon. You can sign up for the whole 4-week program at a kind of bundled rate, or you can sign up for one of the programs. I'll also be including training on Google Drive, which tends to drive people mad these days if they don't really know how to use it and they're trying to share files. So stay tuned for that if it's of interest to you. And lastly, I'll just share that I'm the president of the 100 Women Who Care Mississauga chapter. If any ladies in the group are looking to get involved with some, I wouldn't say charity work, but if you're looking to get involved in supporting charities in our community, I'd love to share how our model works. It's simply 3 one-hour meetings per year where we donate individually $100, collectively more than $10,000. So it does make a big impact in the community. Again, if anyone is interested in getting involved or learning more about that, please let me know. Real quick, March events. Lunch and Learn is coming up on the oh, Lunch and Learn is today. Duh. Sorry, guys. Our MAWB meetup, in-person meetup, is coming up on Wednesday, March 27th. And then our online speed networking is March 29th. I'm just going to pop into April real quick. Our next Lunch and Learn, and they happen on the first Tuesday of the month, or the second Tuesday, pardon me, second Tuesday of the month. We have our Recharge Your Systems for Business Growth. That's by Toby Blake. We have our April meetup on the 24th. And we have a really cool opportunity for business owners and individuals alike. We have standard first aid and CPR course that we're running. It's a blended or a hybrid, which means you'll be doing 7 hours online by yourself. You have a couple of weeks to finish that, which is really, really easy. And then we have a full day in person, hands-on CPR workshop on the 27th. So if you want to learn more about that, let me know. We're also including breakfast, lunch, and snacks for that day. And you will come out of the session with a certificate. We are working with para-mentors, which are paramedics actually that teach the CPR and standard first aid elements. All right, thank you very much for giving me the opportunity to share that information with you. Now on to the important stuff, cash flow management. We have Shalini here today. She's a chartered accountant. She'll go into more details about all of our qualifications, but I'll just share that she's a chartered professional accountant. She's the CEO of Dharna CPA Professional Corporation. That's a family-run business. And one of the things I love about what Shalini's doing right now is she is getting into financial literacy and education. And if you're not following her on social media, you should. She every day, it feels like she goes live giving you tips and tricks and strategies and information about what to do and what not to do, things to avoid. Yeah, so definitely check that out online. And today she's going to help us identify potential cash flow bottlenecks, talk about how we can prioritize expenses, leverage opportunities for growth. And definitely today, you're going to gain some insights on cash flow forecasting, managing your accounts receivable payables, and optimizing your cash flow for long-term sustainability. So very excited. I'll be one of those people who tells you, I'm like, yeah, the numbers are there, but I don't look at them often enough. So I'm really looking forward to the session. So I'm going to stop my share and then hand this over to our financial wizard. I've already given you access, so you should perfect.
You guys can all see the slides, okay?
Yes, we see the new Oscar winner on the screen.
So today we're going to talk about financial literacy. Now, financial literacy means so many things and means different things to different people. So when we're talking about financial literacy, the scope of what we're going to talk about today is specifically around cash flow. Before we get into that, introduction for anybody who does not know who I am. My name is Shalini Dharna. I also get Shalini, Shalani, and Hey You, Crazy Dolphin Lady. It's all good. I respond to all of them. But what's important to know is that I'm a business owner as well. And so I understand all of the challenges that you guys are facing running and building your businesses because I'm too. I struggle with my marketing, I struggle with sales. And you know what? I struggle with my own cash flow management too, because a lot of this is easier said than done. And I want you to give yourself grace as we're going through the different topics that even if it's not perfect, at least you are here taking an initiative to change your story. And so my goal is to use my financial know-how to help entrepreneurs run more successful businesses while keeping more money in your pocket. So we've got a bunch of things that I want to talk about today. We're going to talk about money mindset. We're going to talk about knowing your numbers. We're going to talk about some things that are specifically on the entrepreneurial side. So the first few things actually can apply to either your personal or your business life. And then we'll talk a little bit about some money mistakes. And I hate the word mistakes because everything is a learning opportunity, but we're going to talk about some challenges that people sometimes face with money. So let's get into it. I want everybody to just close your eyes and put your hand out and imagine bills. Imagine a wad of money on your hand. Could be fives, tens, 20s, hundreds. It doesn't matter, but you can feel the vibration of that money in your hand. Fan yourself with it. It's like, I am a bajillionaire fanning myself with all my money. Face it, when we have money in our wallets, don't you feel rich? Even if you know it's like a $5 bill. When you know that there's actually physical cash in your wallet, you feel like $1 million. And so as much as we have gotten into this tap society, I want to acknowledge that holding money also has a certain vibration to it. If you don't believe in Reiki or chakras or anything of that sort, that's fine. You cannot deny that feeling you get when you're holding money, when you're spending money, especially on something that you want to be spending it on. And so all of this goes back to what we call is your money mindset. Your money mindset is how you interact with money. It's like your attitude, your feelings you experience when dealing with or thinking about money, and your confidence levels with money. So if you're reading the list that I have here, and anything on there kind of hits a little too close to home, that's your first homework. We have to get rid of the negative money mindsets before you can improve your money relationship. Because if you go into business with a scarcity mindset, if you go into business thinking that, nope, money is the root of evil, rich people are bad people, you are going to unintentionally self-sabotage yourself. Money mindset and improving your money mindset will help you become more successful in your personal life and in your business life. So which of these that are on the list resonates? Like, have you guys heard of a lot of these? Like, money is the root of all evil, rich people are greedy, it's better to be poor and happy than rich and sad. I will be very happy if I am rich. I am not lying. any of these resonate, and feel free to unmute yourself and contribute to this. It's a small group. We can have a conversation. Are these things that you were taught as you were growing up that, you know, sometimes these thoughts come from our parents or the aunties and uncles in our life? We don't even realize that some of this stuff is embedded into us from a very early age, especially the scarcity stuff. And this is something that I'm actually consciously trying to do with my children. Instead of telling them I don't have the money for it, because that leads to a scarcity mindset, I say, it's not my priority right now to buy you yet another toy. Or giving them options. Okay, you got some money for a good report card, $20. Do you want to put it towards your toy, or do you want to put it towards an activity? We can use that money and put it towards Great Wolf Lodge, for example. So even how you talk about money, by saying, I don't have the money for it right now, you are subconsciously putting into your brain scarcity. How many of you actually thank your bills when you pay them? So tax season is coming. If you owe money, say, thank you, CRA, because of this tax money, I have OHIP, I have roads, I have police. We're not talking about the management of money, okay? That's a totally different conversation. But next time you pay your property taxes, thank you, City of Mississauga, for taking half my money to give me my house that I live on, right? So one of the simple things that you can do to improve your mindset is to actually be grateful for your bills. The fact that you are paying a bill means that you have received something in exchange for that money. Does that make sense? I know you guys are like, I don't want to thank the tax man.
Yeah.
But you know what? The more money you make, taxes becomes a reality of it. And that's not a bad thing. It's hard in the beginning when the amount of money you are making is not quite enough for your personal needs. And so then you feel like I've worked so hard and now I'm giving this much away and I don't have enough for myself. But as your business grows to the point where that amount of taxes does not impact your quality of life, you won't feel that bad paying. We want to make sure we don't overpay the tax man, but we won't feel that bad paying. So be grateful that you have earned a profit to actually owe taxes, because there's a lot of people that are still making losses in their business. So how do we track all this? It's the B word, the other B word, people. Budget. A lot of people see budgeting as this restrictive, oh my God, she's gonna tell me I can't buy my daily latte, and if I don't have my jolt every day, I cannot function. No, there are no rules when it comes to budgeting. You are in charge of your financial journey, and you are going to say what is important to you. So there's a lot of influencers who are like, you know, put 10% of your paycheck here and 30% of it there. What's important to you? And we have to be realistic. You know, you can't say you want to have $1 million at retirement and only be saving like $1,000 a year. There has to be a correlation. But this is where you're going to write out all of your wants and dreams, all of your expenses, all of your commitments, and then you're going to give each dollar a purpose. This will provide money with that positive energy, but it'll also help you stay in alignment with your values, because you are dictating where every dollar needs to go. Not somebody told me I need to put 20% away for retirement. No, what do you want? And if you want to put all of it in a shoe fund, great. If you want to put all of it on a vacation, fabulous. But you're making that decision. You are making a decision. I do recommend that we balance debt with savings so you don't end up in a vicious cycle. So this is where creating what we call a sinking fund can be helpful, where you only buy XYZ or go on that trip when you've saved enough, so that you're not dipping back into your credit card or your line of credit, and then you end up kind of in this vicious cycle of I finally paid it off and now I'm doing something back and now I'm drawing off it again. I will also say it's easier to monitor expenses than income, especially as a business owner. If there's a way to increase your income, fabulous. But tracking your expenses is just as important. And so how are we going to do that? We're going to use a money calendar, a simple Excel spreadsheet that shows you when is money coming in and when is money expected to go out. There was an app called Mint that I could link my credit cards and bank statements, but they've actually shut down and they're doing something called, I think they're merging with Credit Karma. The other one that a lot of people have used is You Need a Budget. I am a big fan of Excel. And so what are you going to do? You're going to have one credit card and one bank account. And this way you can export to a .csv your bank and credit card transactions and actually allocate them. How much did we spend on takeout versus the budget I had set for myself on takeout? How much did I buy from Amazon? What did I buy from Amazon? Okay, I buy my diapers from Amazon. I buy the toothpaste. I buy the, oh, but I bought some more earrings. I bought some more, probably didn't need those, right? You're going to hold yourself accountable. It's a judgment-free zone, but it is an accountability zone. And so you're going to do this every single week, updating the calendar. If you're in a relationship, you're going to do this with your partner. But the biggest advice I can give you when it comes to this tracking is that use one credit card or bank account because it'll just make your life so much easier. But when you have some things on this card and some things on that card, it actually makes it harder to track. And you can get these templates on like Excel. If you have Excel, they have different cash flow and budgeting templates that you can use. One thing that this template has done is actually put in the bank account balance so that you can actually see what the running total of your bank account should be as you do all the things, which is also helpful because as you're putting all the things in, you can be like, holy crap, I'm going to have a loss that day. What am I going to do for that? You can plan for your upcoming withdrawals. I'm not going to talk too much about credit score, but it's also really important for all of us, especially entrepreneurs, to understand that everything we do does impact our credit. Now, first and foremost, I'm going to say it's an arbitrary number and it does not establish or is not a reflection of who you are as a person. If you have a bad credit score, that does not mean you are a bad person. And so a lot of people get very self-judgy when they're talking about their credit score. But if you struggle to use credit responsibly, a lot of influencers out there are advocating for a cash diet. Anybody want to tell me why a cash diet is actually a bad philosophy?
Sorry, can you tell me what a cash diet is to begin with?
Sure. So a lot of people, influencers say, if you don't have the cash for it, you don't buy it. So you're only going to buy things with the cash on hand. So you're not using your plastic, you are only using cash. And the reason why that is bad advice is because then you are not building credit history. So credit history, there's a few different things that go into our credit score, but credit history is one of them. Are you able to use the credit? Are you making the payments? Are you doing all the things? And so if you struggle with using credit responsibly, pay off the credit card purchase as soon as you make the purchase. So we're just going to add one step into that so-called credit cash diet philosophy. You know you only have $100 in your bank account. Fine, you're going to go buy your $100 worth of groceries. As soon as you sit in your car, you're going to go and pay off that credit card so that at least the transaction is on your credit card. And so you can develop that credit history. Because credit is one of those things that when we need it, nobody's going to give it to you. So you want to be constantly building this. And this is where a lot of entrepreneur clients end up messing their credit because they're taking a lot of loans and they're not making enough income to pay off the balances. So you want to make sure You are, no questions asked, paying off your minimum. If you miss a minimum payment, it kills your credit score. So this is again where you need to be very careful about how much it is that you are outputting. And sometimes if the business is not making enough money, get a side job. I have many clients who go and work side jobs until their main business is thriving enough that they can let that go. And there's no shame in that whatsoever. But we're going to have money dates. I want you to date your money, love your money, Facebook stalk your money. You know, when you like someone, you meet them, you go on their Facebook and you kind of go back way too far into their pictures, and all of a sudden you've clicked a picture from like 10 years ago. That's what you're going to do with your money. Every week, and if you're in a relationship, this is with your partner, you're going to have a money date. Open up that bank statement. What money came in? What money went out? What are we expecting? Review the credit card, same thing. Update that calendar. Plan for the shortfalls and plan for the surplus. Dream together. I'd love to be able to take cooking classes, or I want to go on a family vacation. Plan for those things together. And you're going to then create and achieve these goals together. And if you're flying solo, if you don't have a partner, find an accountability buddy. Find a money accountability buddy that you can do this activity. They're doing theirs, you're doing yours, but do it. You're giving money the attention that they want. Now on to some practical tips. Not that those weren't practical, but when you are making money in your business, you do need to allocate for certain expenses. And one of those is taxes. So open up a separate bank account where from every paycheck or every customer payment, you are putting money aside for your taxes. When you had a job, your employer was doing this for you. So you didn't feel that concept of I have to pay taxes because you just got an amount deposited after taxes. But all of a sudden, when we're responsible for it ourselves, it causes a lot of anxiety. And the reality is, it's because people aren't planning for it. So from your cash inflow, you need to put money into respective buckets. So this is also the profit first philosophy. It's a book by Mike Michalowicz. He did not reinvent the wheel. He just figured out how to market it. Okay, this is something that us accountants have been telling our clients for years. And so using different savings accounts to kind of track and save for taxes, corporate taxes, HST is the first thing you're going to do as a business owner. So that come tax time, you're not, where's the money? You've got it saved. And when you know that you have it saved, tax season, stress-free. Any questions on these budget buckets? Is anyone doing the budget buckets? I got a couple of thumbs up and a couple of thumbs down.
Yeah, I do the Profit First. I've got Profit First. It's a really good book and it's fun as well. You can listen to it. It's easy.
Yeah. And so Profit First, the main principle, I mean, there's obviously a little bit more to it, but the concept is just you are in charge of your financial journey. And so you know you need to pay taxes. You're going to put money into that account. You're in business to pay yourself. So you're going to have an owner's draw account, which is your own personal money for your personal life. And then there's an OPEX, operating expenses. You obviously have day-to-day expenses in running your business, Canva costs, Zoom costs, networking, all those things. You need to have a budget for those so that you can actually pay for those expenses. So you're going to take your money and you're going to allocate it. Very similar to what we were talking about earlier. You are in control of that journey. So some numbers that you should kind of be tracking on an ongoing basis. Your break-even number. Anybody know what the break-even number is? Break-even is how many sales do you need to make to not lose money that month? So you have your ongoing fixed expenses, web hosting, Maybe you have some other subscriptions or other costs in running your business. So let's just say, argument's sake, it was $1,000 worth of expenses. That means you need to earn from sales at least $1,000 to not lose money. A little bit more, because we got to put some of that towards taxes and other things as well. So your break even is the first number that we work on together. Yes, Christine?
Okay,
Your hand is-
so when you're a service-oriented business,
Mhm.
I do have expenses, but it's not like I have expenses like someone who makes a product and has to buy supplies.
But
So
you
it's
still
sort of-
have fixed expenses, whether it's your Zoom subscription or your
Yep.
Canva subscription. And so that's where you can go back to that calendar and be like, okay, I know that in this month, I'm going to have to pay this monthly bill, that monthly bill.
Yep.
And you can still figure out how much money do you need to make to just cover your expenses.
Okay,
You're not going to have as
perfect.
many expenses as a
Yeah.
product-based business, but you still have some.
Right. I love the calendar idea. Actually, no, I have a lot of subscriptions. I need to work on that. I need to get rid of them. Some of them I'm like, oh, it's only $10, but I'm going to use it one day and I never do. So anyway, that's another problem.
But that's where you're looking at your expenses,
Yeah.
right? You're
Yeah.
going to look at your expenses and be like, okay, so, in my family, we took a look at what our personal expenses were and we cut out cable
Yeah. Okay.
because we
Yeah,
weren't.
no, I know that there's opportunities to save monthly on subscriptions that are tiny, but when combined, they all add up. So sorry.
$10 here, $10
Yeah.
there, adds
So-
up to a lot.
So the reason I raised my hand is because the break even point made me think about, is there a rule of thumb in the different industries about what your, let's say, expenses should be? For example, like, is it, if I sell this service at this price, I should make 40%, or is that based on totally on the break even? The reason I'm asking is I'm trying to figure out outsourcing. Right now, I have two fantastic VAs, graphic designers that I use to help with my my social media clients. And then I'm just wondering, well, I want to reduce the amount of time I spend working on things so that I can perhaps work with more clients. You get where I'm going here with scaling. But at what point, like, what's that number? Is there an industry? Am I making sense? Am I making sense?
So, I mean, in terms of industry averages, you can look them up. What I find is my struggle with solo entrepreneurs is that those averages don't always make sense on the scale that we are working on. So I can tell you, your gross profit should be about 30%, and that 30% is supposed to cover all your overheads. But is that realistic for you? And so that's where tracking your percent of revenue by expense category is a far more useful activity than focusing on gross margins.
Okay.
Of all your expenses, how much are they helping you earn?
Right. That's what I want to look at. I want to reduce my expenses that aren't bringing in ROI, and I'm happy to increase my expenses on things that are actually going to help me get more clients or save time so that I don't have to work shorter days.
Exactly. And so that's where one of the things that I recommend is that for any VAs or subcontractors, you try to track it by job.
Okay.
So if you have 5 clients that they're making graphics for, take their cost, divide it by 5. Are you making enough from those respective clients to cover not only that graphic designer's cost, but enough of a profit margin to pay yourself?
Yeah, exactly. That's the position I'm in right now.
So you need to track it by project or by client.
Yeah,
And
we are
the VA might be doing multiple things. You just need to kind of scope out what the cost is per client.
It's interesting because I do know that some clients' work takes them a lot longer than other clients. But anyway, thank you very much for that. I don't want to take up everybody's time,
But you can ask them to time it.
Oh, no, we have a timesheet and every client is written down on the timesheet.
Yeah. So then all you got to do is start costing each client. And if you've got a client that you are underpaying or undercharging, well, now it's time for a very difficult but important conversation of, you know what, your social media is not a standard social media template. There's a lot of modifications and whatever. And sometimes it might mean parting ways.
Yes.
And that's a hard one, especially if you're still in the growing phases. I know I have struggled with that, where somebody comes, I mean, I literally just last week, a client that I've been doing their taxes for literally 5 years now, no reason, just that I'm not using your services anymore. I'm like, nothing bad has happened, nothing has happened, but there's always that level of attrition in all of our businesses. And that gives you the opportunity to then take on hopefully better aligned clients as well.
Awesome.
The other thing, so that's kind of that gross margin profit per service that's here. And then we have to understand in the accounting world, there's a difference between profit and cash flow. Because we use what's called the accrual basis of accounting, we record the value of the work when the work has been completed, irrespective of whether cash has been exchanged. And so because of that, you might have revenue that you've recognized and that person still hasn't paid you. And so one of the things that I do in my CFO hat is there are what I like to say 16 different things that impact your cash flow as a business owner. Potentially 16 different things, because cash flow is the lifeblood of any business, right? And most businesses fail, 20% fail within the first year, 35% within the second year, and 50% by the fifth year, all because of cash flow management issues. But also as women, we are afraid to spend money. We are afraid to go ask for that loan, that startup loan, to be able to invest in some capital or employees. We tend to play a little bit small in our own businesses. So I wanted to talk a little bit about just some money mistakes. So ignoring your money baggage. You know, if you have beliefs that are coming to you when you're making money, sometimes it's even, I can't make more than this particular amount because I'm not going to fit in with my family anymore. You don't want to be the one that is the first millionaire in your family, because then you're not going to be able to link with them anymore. You laugh, but it happens. People have these beliefs. They don't want to rock the boat. So first and foremost, understanding our money baggage. Always be building your credit. Balance the debt with savings. And understand the time value of money. So what does that mean? We didn't really talk about investing in this particular session, but with interest compounds. So let's say you had $100, you made $10 of interest on it. Now you have $110 in the market, then that's going to make 10% or whatever you make. It actually adds and grows faster. So the earlier you can start to do some sort of investing, the bigger the return on an investment you're going to find in the long run.
So, Shalini, can I ask a question about that? What are the sort of timescales that you need to do, that you have for investment?
It depends on what your goals are, right? So many people see investing as just a retirement thing. But you might be investing for a car, a down payment on a house, a vacation.
It's my business that I'm asking about, because I have a very time sensitive flow. We take money in January quite often for summer camp. So that money sits in the bank because I take it all between January and June, and I don't spend it on wages until July to August.
Mm-hmm.
So it has to sit there because we need it, but it's literally sitting in the bank doing nothing at the moment. It's just sitting there.
And so you can look at high yield savings accounts. You don't want to put money that you need within a year in any sort of medium or higher risk, because then you risk that when you need it, the market has gone down. Okay, so this is where your timeline of when do you need that money is going to dictate what we invested in. If somebody comes to me and they're like, I need the money within the next 2 to 4 years, that is a very different investment strategy than somebody who's saying, I don't need it for 7 to 10 years. But you can, instead of it just sitting in a regular bank account, just open up a high yield savings account. Even Wealth Simple has one. I think it's like 4% return on the cash. And you can take it in and out whenever you want. There's no restriction. So you don't want to lock it in a GIC, because when this is locked in a GIC, you cannot take it out. Putting it into a TFSA, again, you could be wasting your potential space if you're going to be taking it in and out within a year. TFSA, as much as it's a tax-free savings account, should be one of your more aggressive tools, because the gain is tax-free. You can make so much money in a tax-free savings account and not pay any capital gains, but people treat it like a savings account. And they just have the money sitting in it in like cash or not even invested, because so TFSAs, RRSPs, RESPs, these are toolboxes. What is the underlying investment is going to dictate how well those investments do, or those toolboxes do. And the other thing that's really important is don't withhold joy. It is so hard with everything and costing as much as it does. You might not be able to do everything you want to do, but prioritize a few things that bring you joy in your everyday life. Because if you don't budget and make space for that in your everyday life, running your business is going to wear you out. You're going to burn out because you're not going to see the return on all of those efforts. So you need to find a way to bring joy into your life with your business, with your personal finances, all of those things. But at the end of the day, making more money isn't going to solve your problems if cash flow management is the problem. So I left about 15 minutes, or I guess we're about 20 minutes, for questions and answers. I know we've had some great dialogue throughout, but does anybody have any specific questions or stories that they want to share of something that they've done in their business that's really helped them manage their cash flow? Yeah, Judith, you're on mute though. Just unmute yourself. I can't hear you yet.
Oh, no. I wonder if it's your headset, Judith. Sometimes when people have that headset, it doesn't allow them to talk. Can you unplug your headset or not? Okay, we'll come back to Judith when she.
So I see Christina Day said, I use a calendar too. Love the idea of putting it into an Excel sheet though. So what you're going to do is you're literally going to export to a .csv all your transactions. And then you're going to filter at the top alphabetically so that all your Tim Hortons is together, all your Amazons are together. And that also makes it easier for you to put it into your buckets. Christine, you had a question?
Oh yeah. So, I do have a bank account and a credit card for my business. And I used to not pay myself. I used to just kind of take money when I needed it. But now on the first of every month, I happily send myself money to my personal account as my paycheck. Yeah, is like a transfer acceptable? Like, and I mark it down as that payment, income.
So I'm going to say, depending on your legal setup, are you a sole proprietor or incorporation? The level of technicality behind this is going to be different. But as long as you just say owner's draw, then when you're doing your bookkeeping, you can say that, yes, that was me paying myself. Understand though, that if you're a sole proprietor, 100% of your profit is deemed to be your personal income, even if it's sitting in a bank account, a business bank account. So
Yes.
the bank account itself does not matter for sole proprietors because your revenue minus expenses, whatever that is 100% your.
Okay. So even though I'm paying myself what I'm calling my income, everything that sits there is still considered income. Okay. Yeah.
Exactly. Whereas when you are incorporated, because the corporation is a separate legal entity, whatever's still sitting in the corporate bank account is going to be treated within the corporate taxes, and whatever's in the person, like whatever you've taken out is what you get taxed on personally.
Okay. Awesome. Thanks.
Kimia, you're also on mute.
Hello, everyone. Can you hear me?
Yes.
Perfect. I have a quick question for you. It's regarding probably not specifically, but regarding grants. How can I best find the grants, and do I have to like financing it? I'm like a little bit scared to like when you said as a woman we're scared to spend money, I was like, oh shit, that's me. And I thought I'll ask like how what is the best way to approach that as a small business owner?
Well, short of robbing a bank, which is always a fun option, we need to apply for the grants, and that is like a full-time job.
Mhm.
Okay, so you said a word there that you were scared. Dive into that a little bit more. Why are you scared of applying for money, of applying for a grant? Because I guarantee you, men have no problem applying for money. Why are we scared? And a lot of the times what I hear is, well, if the business doesn't make it, then I'm going to have this loan and I'm going to put a burden on my family. And this business is supposed to help alleviate the burden, not add to it. But you're already walking into your business thinking it's going to fail.
Mhm.
You're already setting it up for failure when you're going into it with that thought process.
Yes, you're
But
right.
in terms of the grants, unfortunately, grant hunting is like a full-time job in and of itself.
Mhm.
There's Futurepreneur, there's Startup Canada, there's smaller organizations that offer grants. Each of them has an entire application process. It's a process. You can hire grant writers who are going to then fill out the application, and they take like a percentage of whatever you get as their fees. There's that. The other thing I will also say, there's a difference between grants and loans.
Mhm.
If you go to like BDC or your bank, you're getting a bank loan. Line of credit is better than a bank loan. Anybody want to tell me why?
Oh, I did not know that. Why? Interest?
Well, yes. So a line of credit is better than a bank loan because the bank is going to start charging you interest as soon as they deposit that money into your bank account, whether or not you need it.
Mhm.
A line of credit gives you access to the funds, and you only pay interest if you use it. And then you can be paying it back and forth, back and forth. So the interest calculation is a little bit more favorable, let's say, when you have a line of credit than a bank loan.
Mhm. Okay, that's a very good point.
And it's also easier to get a bank loan when you're going into it saying, okay, I've got $10,000 of mine saved up. Can you give me a bank loan to match? And they might do like a 1-for-1 or a 2-for-1 versus being like, well, I kind of spent all of my money. Can I have some of yours now? So timing of when you ask for loans is also important. What you're going to do with those loans is equally important. The bank is way more likely to give you a loan for a new website, to buy inventory or equipment, tangible things, than untangible things of I need to pay myself. They don't care.
Yes, for sure. Good point. Thank you. Thank you so much. And just one more question. You know the website you were telling everybody that like to budgeting on? I just couldn't catch it. Can you say it one more time? I'm just gonna write it down.
So the one that I used to use was called Mint. They are no longer in business. The other one is You Need a Budget, YNAB. I don't use them. So I cannot comment on whether they're good or bad or anything of the sort, but that's the one that I've seen a few people reference. I personally think an Excel spreadsheet is just fine.
Okay. Yeah, because I currently use Excel, but I need to budget more organized. Okay, perfect. Thank you so much. Thank you so much. It was an amazing talk. I appreciate it.
My pleasure. Aviva, you're up.
Hi, thank you. Good presentation and a lot of great points. I just wanted to add that when I did start tracking my my expenses, so I went on to QuickBooks, which helped and gives me great reports. But when I started tracking my income every month and my business every month, it really, really helped. Like it just gives you that clear view of, okay, this is where I'm holding. If I have a slower month, then what do I need to do to generate more income, or if, you know, things are on track, because I do set goals also for every year. So sometimes I'll have a little bit of a better month, sometimes not, you know, there's a slower month, but so I don't stress if there's one slower month, because I know there are better months, but just to be on track, like I can't stress enough. Like before I started tracking, like when I put in, like when I set up business or got new business and I saw I was on target, it really, really helped me focus, as opposed to just not tracking it at all. It makes such a big difference. So all the points you gave about tracking your money and tracking things and the cash flow, it's so important to, like, you can't wait quarterly. You've got to do this monthly, because if you wait quarterly, then it really, really affects your business. Like you're just too far behind the 8 ball if you're going to wait every 3 months.
And that's where I usually recommend to my clients, pick a day that's your CEO day. It's not about being client deliverables. It's not about working on or like in your business. It's working on your business. If you've got paid ads, is it working? Is it not working? If you've got people that owe you money, you send them that gentle nudge, reminder email. You have to have that day where you're taking charge and control of your business, because all of us, we probably have a million client deliverables that we can work on. But if you're not tracking it, like you said, Aviva, you'll lose sight of it. And so, you know, great awareness that you have cycles in your business, because then you can plan for that. I know in my business, March, April, May is my craziest time of year. And July, August tends to be a little bit more crickets. I can plan for that so that I don't spend it all in the few months. I can, you know, keep more money and allocate it. So great awareness. So your name says super scientist, but what's your actual name?
Sorry, I always do that. It's Louise. I have a question. I don't know if it's relevant, and it's interesting because I've got Profit First. I've got YNAB, so I have You Need a Budget. I don't use You Need a Budget to budget. I use it to mark my transactions for expenses, so that when I send my accountants where everything's gone, they don't have to go searching for it. I can tell them what everything was more easily, but I don't use it for budgeting. I use my I use my my normal Excel sheet for budgeting. But the one I was going to say was the Canada Business has brought out a new app, and I keep sending it to the MAWB as well. It's turning out to be quite a useful tool. If you go in there, there is an area about looking for financing tools, and it actually only the ones that are supported by the government, but it will give you access. And if you have a GCOS login for the CRA, you can actually use that to apply directly for grants and everything as well. So it was just to comment on that. But I had a question about dividends versus pay, because I've never used dividends and I don't really understand how to use them. I have paid myself, and I'm an incorporation, so I send myself a pay, but we've managed to stay small. We run zero profit accounting is what I call it, i.e. at the end of the year, I have zero profit. It takes quite a lot of management sometimes. But I don't pay tax, because by the time I've paid all my bills, I don't have any profit. I don't know if I'm going to manage to do that next year. And my accountant this year put dividends into my accounts, and I had no idea what that meant. I didn't take them, I didn't do anything with it, but he allocated it, and I don't know what that means.
So that's a little bit beyond the scope of what we have time here to talk about, but very high level. A dividend is paid after profit. Salary is paid before profit.
Right.
And typically we prefer to have profit in the corporation, because a corporate tax rate is way lower than our personal tax rates. So I'm not sure why you are intentionally trying to show zero profit and then therefore show a higher salary, because then your personal taxes are going to be much higher.
I don't have a high salary. Last year I hardly earned any money at all, but it was the first year that we did take money. But
I would also take your mindset of you're trying to make it zero profit. That's also
Yeah.
kind of, you know, if you're always trying to be like, I don't want to make enough that I'm not going to show a profit, well, then your sales are never going to be high enough because you don't want a profit.
Yeah, this year we're not going to manage it. It's not possible, I don't think. So we've got this funny situation where we're growing, but you know,
You need
so
to do a little bit of a financial strategy with your accountant to actually kind of plan for what you think is going to happen and the tax consequences thereof.
yeah, I think so. Yeah. Okay, thank you.
Any other questions? Okay, well then, Christine, I'll send it back to you.
Awesome. Great job. So much information, lots to think about. If someone was asking about where you're tracking in spreadsheets, there was a lot of great suggestions mentioned. And while you guys were talking and asking questions, I just put into the chat box that I just, if you do a search, you can pull some up. And I just gave one example. I'm sure that you could start with something like that and possibly massage it to fit your needs. But there seems like there's lots available out there. If Shalini has any suggestions, great. Oh, Christina, I see this question here. It looks like we didn't answer it. And I don't know if Shalini has time to do that. When does it make sense to incorporate? I know that's a very not a straight answer either.
So the first thing I'm going to say is that if any accountant is telling you to incorporate without walking you through the pros and the cons, please run. A lot of accountants will force you to incorporate because they can charge more for a corporate tax return. There are actually accountants who don't want to do work with sole proprietors because it's a simple return. We don't necessarily charge a lot of money, and corporations then add layers of complexity that adds to the fee. So the first thing that I ask my clients, are you making more than what you need to pay yourself? And if the answer is nope, every single dollar that I make in my business, I'm going to need to pay myself, you may not achieve the tax advantages to the corporation. But there's legal reasons to incorporate, and there's non-tax, like other non-tax reasons. So we've been talking a lot about grants. There are lenders out there who will not give you a grant or a loan unless you are incorporated. You might want the legal protection to incorporate. So you need to understand why you're incorporating, and you need to understand that a corporate tax return is more expensive. Bookkeeping is more complicated. That Excel spreadsheet, P&L, no longer applies. You have to do double entry accounting to create a balance sheet and a profit and loss statement. So are you willing to take that on? And if there's tax savings, 100%, it makes sense. But so when does it make sense? It's situational. Why are you incorporating? I have some clients, they're like, I know I'm not going to save taxes right now, but that's my goal. So we incorporate them from day one because they're determined that it's gonna make sense to them eventually.
Awesome. I hope you found that helpful, Christina. Okay, great. All right, everyone. Thank you so much. And Shal, thank you for all of your great advice. It's 1:01. We're going to wrap up. I am recording this, so, we'll send out the recording to those who missed it. Shalini, do you have any kind of offer or anything that you wanted to present to the ladies today?
Yeah, so I have a bunch of different digital programs. So it is tax season. So I have Tax Prep Masterclass, which is a digital program on kind of training on taxes. There's the Entrepreneur Toolkit, which goes beyond taxes. It still has taxes in there, but what is bookkeeping, pros and cons of incorporating? So those are my two kind of educational platforms. And then I have BizBuddy, which is a group CFO session. This is where you get that monthly accountability. We talk numbers, we talk what's working, what's not working. And so sometimes there's business coaches, which are great, but they don't know your numbers. And so I bring in the business coaching with financial accountability.
Awesome. So would you be able to share that with me? And then when I send out the
Yes.
Recording, I can send out the links with the description. People can see if it's right for them and sign up right online. Is that right?
Yes.
Excellent. Thank you so much. Okay, ladies, have an amazing day. And within 24 hours, I'll send the recording and the links for this session or for the courses she spoke about. Have a good one, everyone.
Great. Thank you
Thanks
so
again,
much.
Val.
Take care. Bye-bye.